Hello, dear traders. My name is Clara, and these are the main trading ideas for the current trading session. First of all, let's discuss the situation with franc against dollar. The pair is trading at 0.8330. Last week, the Swiss currency reached its highest since 2015, while the monthly growth of the franc was the largest since 2008. It is worth noting that the high cost of the national currency has created difficulties for local exporters who now find it unprofitable to sell their goods. The situation is also complicated by a significant reduction in demand for goods abroad due to the consequences of the tariff war initiated by the Republican administration of the White House. According to analysts, if the franc continues to grow, the national economy will come under serious pressure, which will not be allowed by the Swiss National Bank, which is now expected to intervene in the situation through currency interventions or a sharp reduction in the rate. Given this, the pair retains growth potential. Next, dollar against Canadian currency. The pair is trading at 1.3890. Trump said on Wednesday that the 25% tariff imposed on cars imported from Canada to the United States could be increased. Meanwhile, the Canadian dollar is also under pressure from the International Monetary Fund, downgrading its 2025 growth forecast for Canada to 1.4%, renewing concerns about weakening domestic demand. In addition, the Bank of Canada's decision to keep its key interest rate at 2.75% underscores its cautious stance, partly due to ongoing uncertainty over potential U.S. tariffs. Canadian retail sales data will be released today. If the data disappoints, the pressure on the Canadian dollar will increase. And finally, euro against the dollar. The pair is trading at 1.1330. Yesterday, April data on the business climate in Germany from the Institute for Economic Research was published. The indicator rose from 86.7 points to 86.9 points. IFO President Clemens Fuest noted that, despite the positive statistics, uncertainty among companies has increased, and the country's economy is preparing for turbulence caused by U.S. trade tariffs. It is also worth noting the comments of representatives of the European Central Bank. Thus, the head of the Central Bank of the Netherlands, Kees Knot, said that in the near future, inflation in the eurozone may slow down faster than expected due to the strengthening of the euro, cheaper fuel, and the introduction of U.S. trade tariffs. Against this background, the ECB may continue to cut the rate. So these are the main trading ideas for now. Thank you for your attention, and don't forget to subscribe to our YouTube channel.